All right, guys and gals, it's about that time of day again here, boys and girls. Newsletter time. JJ here. SchoolOfTrade.com, SidewaysMarkets.com. It's December 4th, 2014, a Thursday evening, the fourth day of December 2014. We are cruising our way through this first week of the last month of the year of 2014. We got non-farm payrolls less than 18 hours away. Are you guys excited? Are you ready for it? Well, we got some markets consolidating. We got Crude consolidating, Russell consolidating, gold consolidating. No real surprise there. This is the biggest news event we get, and so we want to make sure in tonight's newsletter we are getting us prepared for whatever happens tomorrow in these crazy markets after we react to that non-farm payroll report. So, before we jump into our newsletter charts for this evening, I do want to remind you, make sure you're watching our video on our trading blog right now at SidewaysMarkets.com. If you're watching the video over on our YouTube page, there should be a link right below tonight's video that will take you over here to the trading blog. Now, it's very important you watch this video on our trading blog for three specific reasons. The first reason, well, you can download all of the charts that I'm going to use tonight and have them ready for you tomorrow. Whether you're a member of mine at SchoolOfTrade.com or not, we've got all the charts, all my hard work this evening you can download and have those ready for the use for tomorrow. Second thing here, upper left-hand corner. I would love to give you a free pass to come out and attend my live trade room. If you're not a member of SchoolOfTrade.com and you're interested in seeing what it feels like, what it sounds like, what it looks like to be part of our trade room, I would love to invite you in on a free pass. Grab that in the upper left-hand corner. And, of course, in the lower left-hand corner, right above my ugly mug, you'll see a spot there for your name and your email address to register for our nightly newsletter mailing list. Now, guys, if you register for the mailing list or if you grab your free pass, I'm going to send you a verification email to make sure I have the correct email address as well as get approval from you and make sure you're not a robot. All right, so make sure you check your junk mail, spam mail, right? Check your inbox once you register for the newsletter or grab your free pass. And don't forget to download today's charts. That way you're locked and loaded right along with us tomorrow. All right, guys? Boy, we got a big party going on tomorrow morning at 8:30 a.m. Non-farm payrolls. The biggest news we get as traders. Let's get ready to capitalize on it. Now today, what I'm going to focus on doing right now is I'm going to focus on giving us options because we have no way of telling what tomorrow's news, well, we do have a way, we have an assumption, there's a few clues that we've had. We've got some analyst expectations, right, about 2.25K for jobs tomorrow. We saw the ADP employment come in a little bit better than they were expecting, just above 200,000 on ADP. So I shouldn't say we don't know. We do know what to anticipate for tomorrow's non-farm payroll number. But in all reality, the news number itself tomorrow has very little relevance to how we will see the reaction from the market. So the first thing I want to remind us about tonight is that as we're looking at these charts, I'm going to stay open-minded to whatever the direction this may be tomorrow. I don't want to try to predict. I want to give myself options for whether we go up, down, or sideways. So let's break this down looking at gold first. And we can see we made it halfway to that collapse and we never quite got there. If you've been watching this newsletter this week, you've heard me talk about the fact that I expected this price to go up, try to go higher, and fail before tomorrow's non-farm payroll report. In fact, last night I said, well, probably at the very worst case scenario, be right on top of 1,200. But look at how, now obviously we're just a few points above 1,200 right now, but hey, this is pretty interesting how we're really stuck here at these highs. I was not expecting this. So apparently today's ECB announcement today, tomorrow's non-farm payrolls, has a little bit of analysizing, paralysizing right now, right at these highs. So we got some analysis paralysis at the highs right now, and for good reason. We know that gold is going to be one of the most active markets that reacts to this non-farm payroll report tomorrow. So we want to be ready, willing, and able to go in either direction. Let's talk about what will happen if price goes sideways. If price does not move aggressively up or down tomorrow, if price goes sideways, we've easily got some buying opportunities at the lows and some selling opportunities at the highs. Okay, so tomorrow morning, once that non-farm pay report comes out, if we just chop around sideways, now we know, make sure you sell those highs, 12.21, 12.14, 12.17, buy those lows, 94.5 to 88.2, 83, right? Those are going to be the areas where you want to play into. Now, what if we jump? If we go higher here, I'm going to execute what we call our breakout strategy. The best way to buy if we go higher here tomorrow is going to wait for price to break out, then buy it on a pullback up to a target that we have listed overhead. I have a target overhead at 1244.1. 1244.1 is my buyer's target. Again, though, make sure you negotiate this entry the right way. I do not want to buy the high of this range. So as I go up to the highs of this range, I'm going to be looking for a reversal to sell it. If we blow right through those highs, though, do not buy that high still. Wait for it to come back. It'll most likely come back somewhere around that 12.21, and we can buy it on the way up to 12.44. What about the opposite direction? What if we go lower? Same principles apply. There's my sideways range. I'm going to make sure, again, like I said, price goes lower, I'm originally going to look to buy it. I'm not going to blindly buy it. I'm going to wait for a reversal pattern to trigger me into the trade long. Whatever reversal pattern I see, that's what we'll look for. If we blow right through it, same thing. Get a new lower low, watch for the retracement, and then sell it down. I have a target waiting for us here. Big target at 58.7, small target at 83 even. So we got 83 and we got 58. Okay, as you can see, pretty big range there. Tough to tell how far we're going to go tomorrow, but the biggest challenge we're going to have is not selling the lows or buying the high when we make a run for it. So err on the side of caution, sell the highs, buy the lows first. If we see a breakout, then execute our breakout strategy here at School of Trade, which of course tells us the correct ways to trade a breakout of a trading range, right? Members, I'm looking at you right now. Moving forward, on the 16 anchor chart, this is an excellent example of a faster time frame. Draw some trend lines from the lows, draw some trend lines from the highs, and as you can see here, we have just a little bit of consolidation, right? Just a little bit of a triangle, as you can see. Now, the way that we're going to trade a triangle is we're going to trade it first like a wedge. We're going to trade it first like a range. So as the price goes higher, I've got selling opportunities at the highs. As price goes lower, I have buying opportunities at the lows. So I am going to err on the side of caution, look for buys at the green boxes below, look for sells at the red boxes above, and we're going to continue to capitalize on this range, but stay patient, especially if we get stuck right in this middle, right? If we sit right in the middle here around this 1206 area, just stay patient. Wait for price to get down to that low and buy it back up. Wait for price to get up towards those highs and then sell it back down. Okay, that's the easiest thing that we can do right now for this type of trading range. And then again, if we make a run for the high, I'm definitely going to look to sell that high first. But again, I will then look to buy the pullback to 1221 if we do make a run for it, right, at those highs. And same thing to the downside, right? As we go lower, I'm looking to buy those lows. But if we do make a nice strong push to it, I will look to sell, but I will make sure that I don't sell above that 91.4. If you're a member of mine, you know exactly what I'm talking about. Looking for breakout traps and looking for breakout pullbacks right now. Last but not least here on the gold, we've got the gold price action chart. As you can see here, we pretty much just went up and down and up and down and back down again. As you can see, very easy to find that sideways trading range, right? We got bear traps, bull traps, bull traps. Bottom line, what I see right now is we have that short-term trend about late morning, mid-morning here this morning. Okay, we had the sellers retest the lows, and now it looks like they're going to make another run for it here at those lows. So if you're selling here overnight, 1202.5-ish, right? It's not really the exact level there, but, you know, 1202.5 should be a decent target for you. And then you'll look for a bull trap to buy it back up, right? So sell the highs, buy the lows of this trading range. And again, if we happen to break those lows, remember to look for your breakout with a pullback, right? Breakout with a retracement, right? Don't go selling that low. Don't go buying that high, right? Trade this responsibly, like it's a sideways range, and do it correctly. All right, guys? So members, you know how we trade a breakout range. Trade that accordingly. Let's keep going. Moving from the gold to the Russell here. Now, boy, I could have left this chart up all week, right? Same chart, nothing's new. We got Russell in a long-term bullish trend, which you can see referenced by the indicators in the upper left-hand corner, right? The indicators tell us what direction we're going in long and short term. I can easily see we had this bullish channel, and then now we have a megaphone. A megaphone is a very rare pattern. We teach all this stuff, by the way, at School of Trade here with our membership class. But again, very rare pattern, the megaphone pattern. So we're going to continue to look to buy the lows and sell the highs. And that's really all we've had to do so far to make our money on this Russell. Buy those lows, up to the highs, sell those highs, down to those lows, buy them right back up. We'll continue to do that. But again, keep an eye on those trend lines, because those big, thick trend lines that I just drew in, that megaphone pattern, I think you're going to see right away a nice reversal off those if we can get to them sometime tomorrow. Okay, again, right in the middle. Look at this thing, right in the middle of that range right now. We get the big round number overhead, and we've got some key support down here at 1120 right now. So we got a lot of levels here that we're going to be able to use for reversals. Now all we need is just to get there right now. Hopefully tomorrow's non-farm payrolls will get us there. Moving forward here to the 16, and here is another example, this time on a faster time frame, with a little bit more detail here for you now. So here's that sideways range we're talking about on the 32, right? There's that sideways range. And of course, we get to sell the highs, we get to buy the lows, right? So we're going to look to the same thing we talked about on gold. As the price goes sideways, we wait for the price to get up to the highs, down to the lows, right? We buy the lows, we sell the highs, right? So if price just starts grinding sideways here tomorrow, identify the range. If you need help with that, don't forget to come out and see me in the trade room. If we go sideways, identify the sideways range, short-term range, buy lows, sell highs. If we go higher here, we've got great sell zones waiting for you here. I've got 86.4, 95.8, and I don't think we're going to get there tomorrow, but if we do, 12.6 is going to be a breakout target. If we go higher here, again, above that high, pull back up to that target at 12.12. I don't think we're going to get there in one swoop tomorrow. My gut tells me right now that we are not going to be able to get out of this range here. So as we go higher, we sell it back down. As we go lower, we buy it back up. And again, I've got sell zones overhead, 82.5, 86.4, 95.8. I've got buy zones below, 58.4, 48, 39s, 67.3. So as we go to those lows, I'm looking for buying reversals. As we go to those highs, I'm looking for sell reversals. And again, just be careful trying to buy the high or sell the low, right? That is borderline trade account suicide right now as we go into non-farm payrolls. And then Russell price action, you would have thought this might be the same chart as gold. Looks very similar. And again, you're going to see a lot of this stuff consistently ahead of a non-farm payroll Friday. What do we see? What do we see here? Well, we had the sellers in control today. And if you recall from last night's newsletter, my exact words were last night that if we didn't retest those highs, remember this from last night's newsletter? My assessment last night was that if we didn't retest those highs, we would collapse. And that's exactly what we got today. Get that off there. There we go. Right? So now sellers take control. They're in full control here. Then the buyers grab it. Right? This creates a low of this range. The buyers grab it now. They overshoot. Right? So you got some panic. You've got some fire in a movie theater, right? Some irrational price action, overshoot that channel. That means the buyers are walking dead, right? So we know the buyers tried to retest, they failed. We know why they failed, right? Because of the overshoot. And so it comes collapsing back down to the low. We consolidate at the low and then kind of grind back higher here. Okay, so we're stuck in the middle of this sideways range. Basically, no real solid clues from the price action as far as who's going to take this and run with it. We had a really big clue last night, but tonight, though, not the same scenario here tonight. So what we're going to do is we're going to trade this just like any other range. And I know I sound like a broken record right now, but if you're a member here at School of Trade, you know exactly our 3 ways that we trade a consolidated range. I'm looking for a bull trap to sell the highs, bear trap to buy the lows. And again, if we do break out, do not buy the high, wait for the breakout and buy a pullback. Don't sell the low, wait for a retracement and sell the retracement right back to the highs or lows of that sideways range. All right, guys? Do not buy the highs, do not sell the lows. And remember, if we sit right in the middle, you are sitting on hands, right? Wait for the price to get to those extremes and then trade it accordingly. Last but not least here, on the crude oil trading sideways here. I mean, just right in the middle. It was very, very quiet this morning. We literally had about an hour of price action this morning that was tradable. We had a really good day with it, but it was just really slow today. It was really slow. And you really kind of felt that these traders on crude oil were definitely waiting to see what we have in store for tomorrow. So we're stuck in the middle of the range. We are literally smack right in the middle of that trading range. Now, we know when we're in the middle of a well-defined range like this, we have to assume it's going to be sloppy. So trade smaller size, be more selective, be more disciplined here when you notice that you've got this again, very well-defined range and you're right in the middle. Now, if you look kind of between the lines here, you'll notice that we have a spike and channel, right? Now, I'm sure some of you will call this a bull flag, right? A bull pennant, whatever you want to call it. It's a spike and channel. So a spike and channel tells us that we'll most likely make a run back towards those highs. But remember, one of the hidden gems of a spike and channel pattern is that if it tries and fails, it'll return back to where the spike began. So really right now, I would expect the buyers to make a run for these highs. If they don't, though, it will most likely collapse down to those lows. And we might get some opportunity to do that, to sell short on that before tomorrow's non-farm payroll report, right? It's tough to guess right now because the whole world just kind of stops and waits for this news report tomorrow. And that's why you're seeing so much consolidation here right now. So spike and channel pattern tells us to look for price to try to retest the highs. But if those buyers don't retest those highs, we are going to end up down at those range lows, possibly all the way down to that 63.72. All right, guys. Long-term trend is down. I'm still going to be looking for selling opportunities. I'm looking to sell the 68.80, looking to sell the 69.62, looking to sell the 70.78. Right? I don't think we get all the way up here, but I will sell the 73.25, right? Et cetera, et cetera, et cetera. Oh, and don't forget about this trend line, right? There is a trend line overhead here that if you're not looking closely, you might miss there too. So remember, tomorrow morning news comes out, this could go anywhere. So we want to be ready for if price goes sideways, you're right in the middle, stay patient, right? If price goes sideways, define the sideways range. Okay, this is a real slow anchor chart, so you guys have it accurate for tomorrow. If we open up tomorrow after non-farm payrolls and we just go sideways, that's perfectly fine by me. Just recognize the range, right? Bull traps at the highs to sell, bear traps at the lows to buy. Very, very easy. Execute our breakout strategy tomorrow if we go sideways. If we make a run for the high, I am definitely looking for a reversal to sell it back down. If we make a run to the low, I will take some scalps on the way down to that low because we are following the long-term trend. But at the same time, though, I cannot sell these lows. So if it just jumps down to those lows here, you really got to be careful trying to sell right here at those lows. You're better off waiting for a reversal and be a short-term buyer. Or as we break through those range lows, again, thinking of this as a trading range right now, executing properly our range breakout strategy, which would be selling a retracement up to that 63.72. All right, guys, so make sure tomorrow do not sell at that low if it just collapses down to those lows and starts to move lower. Now, right smack in the middle, as you can see here, 16 anchor chart here. Here's that spike in channel again, right? Now you can see where that spike in channel is coming from. Here's my spike. Here's my channel. And again, we know that this is really, for the most part, like I said, I'm sure many of you are calling this a bull flag. So we go up, we pull back. That's why I said we'll probably make a run for the high. Tough to tell again, just because the news coming out tomorrow morning. So the way it looks right now, though, we should try to make a run for the high, which is perfectly fine by me because I'm going to stay patient and wait for selling opportunities at these highs. 67.77, 68.80, and then 69.50 up at those highs. Those are going to be your easy sell zones overhead. Again, if we do end up going sideways here into tomorrow, I will identify that sideways range. I'll keep on looking to take little nibbles, right? Sell the highs of those sideways ranges, right? Until it stops working. If we go lower here, though, right? And again, I want us to go higher so I can sell it at a nice premium price up here and then take my profit, right, all the way down at the lows. If we do go lower, though, I will be looking for retracement trades, wave trades on the way down to that 63.72. We get a target down here at 64.97 before we get to 63.72. Should be relatively easy to sell short down to that low. But again, like I said earlier, the one big concern I've got right now is if this news was to come out and push this price all the way to the low, right? Because it can definitely be violent to push that price all the way to that low. This is non-farm payrolls we're talking about. So if I find myself down at the lows here, I really got to be careful being a seller there, right? Just don't sell the lows. Buy the lows or take your profit on the short, but do not sell that low. If you go to a new lower low below 63.72, execute the wave pattern as a range breakout, just like we talked about earlier. Last but not least here on the crude price action chart, sellers could not retest the lows, right? These sellers couldn't retest the lows. Sellers were in complete control this morning early. We then saw the break. The buyers tried to grab it. They failed. But boy, if you look closely here, and in our trade room, we sold this here, we sold it here, and our goal was to get it back to those lows, and we just couldn't. It just wouldn't get back to those lows. So the fact of the matter is, sellers were in charge the whole morning session, and then they lost control, tried to take it back. Again, this makes a lot of sense. I do expect those buyers here right now to try to run this thing up the flagpole up to the highs of that range. I'm looking for a looking for a bull trap at the high, right? Looking for the buyers to try and get long above the high. I'll sell that back down. I'll sell the high of the range. If you're a member of mine, you know exactly what you're looking for. Again, very easy right now because they're all consolidated, right? We're all going sideways, and a sideways range is one of the easiest ways to trade, but you got to know how to do it. All right, guys? As a member of School of Trade, of course, you'll be given the proper training you need to do that. All right? So we expect the buyers to make a run for the highs if we can break out of this range. If we stay in this range, though, remember, bull traps at the highs to sell, bear traps at the lows, right, to be a buyer, and follow your breakout strategy as we go into tomorrow's non-farm payrolls. Now, speaking of this news, I heard there was news tomorrow. Yeah, absolutely there is. We have the biggest news report that we get as traders, right? Tomorrow is the Festivus for day traders with non-farm payrolls. Well, let me be more specific. Tomorrow is the biggest news event that we get as traders. There are only two news events that have long-lasting impacts on the markets that we trade. What are those two? One of them is happening tomorrow morning, the employment situation, or better well known as non-farm payrolls. The other one is the FOMC meeting announcement, which happens 8 times a year. Those are the only two news reports where people literally batten down the hatches. They get all the analysts involved, and they use that news to plan for the future. Every other news report, you won't see it really affect it very much long term. Tomorrow's news report, though, will have long-lasting impacts for the next month of trading, right? This happens every month, the first Friday of every 1 month. So what usually happens is we usually see price get really thin, really low volume, nice and consolidated about 18 to 24 hours before the news comes out. You saw a good example of that today. When the news comes out, we have to be very patient tomorrow morning. From my personal experience, you have to at least wait about 15 minutes after this news comes out. And it really doesn't matter what the news is. Here's why. Tomorrow morning, if we see a news release at 8:30 that is right at expectations, okay, keep in mind, every news website already has published their analyst estimates for Friday's non-farm payroll. We also saw the ADP employment report on Wednesday morning. That came in not as sparkling as they were hoping for, but it came in above the key threshold of 200,000 jobs. So we expect us to be within estimates tomorrow. Fast forward to tomorrow, if we get the number out right as they expected, we'll usually get a very slow chop and slop range-bound scenario because everyone knows about that already, and because they know about it, subconsciously or consciously, they have already priced this news into the market. By Friday morning, the analyst's expectations for tomorrow morning's news report is always already priced in. Okay? We don't see it happening, but it manifests itself as soon as we get to about Tuesday, Wednesday this week. So scenario one, if we come out as expected tomorrow morning, we're going to need to wait patiently to find a trend direction and then follow that trend. If it comes out as expected, it's not going to catch anybody off guard, and this and all of these markets will have already priced in that news already. So stay patient if it comes out as expected. Find the next trend, right, and then follow that trend. And remember, the trend tomorrow morning might be sideways. If we go sideways tomorrow, just like I've said today, execute your breakout strategy. If you're a student of mine, you know exactly what I'm talking about. What about the second scenario? The second scenario is if the news comes out tomorrow morning and it's outside of expectations. Now, don't get me wrong, professional traders are always prepared if the news comes out as expected, if it comes out better than expected, or if it comes out worse than expected. So the best asset managers, the best traders in the world will be ready for whatever the scenario is tomorrow. But that is the best traders. We're talking about the mass majority of uneducated, uninformed, new rookie traders. What's going to happen is most of the time when we see the news come out tomorrow morning and we are outside of expectations, all hell breaks loose. We get crazy volatility, insane price action, and just dangerous, violent moves on low volume. So if we see the market react that way tomorrow after non-farm payrolls, you're going to do the same thing. You're going to sit on hands for 15 minutes or until as long as it takes for the price action to calm down. So scenario one, we go as expected tomorrow. We wait patiently for price to figure out what it's going to do afterwards. If we have the news come out higher or lower than expectations, it will be violent and usually way too dangerous to be trading. Guys, you got to remember, tomorrow's news event is a news event that a lot of professionals don't even touch. A lot of traders tomorrow, they'll take tomorrow as a day just to watch, and then once they see what happens, they'll place their bets towards the end of the morning, or even more accurately, next Monday, right? Next Monday is Reaction Monday. That's when we typically get the easiest trades after non-farm payrolls, right? All the craziness gets absorbed on Friday morning. So be careful if it's moving too fast for you or too slowly. If it's moving really fast, stay patient. If it starts to move really slowly tomorrow for the news, chances are high you get a range-bound environment, so execute your breakout strategy like we've talked about already. Now, we do have some other news here tomorrow. I'm not going to say we don't have anything else here. We do have the EU, we got the GDP tomorrow morning, we got international trade, labor force, merchandise trade, factory orders, none of this matters, right? None of that stuff matters. Nobody is going to be doing anything tomorrow except watching that non-farm payroll report at 8:30 a.m. And guys, don't forget, tomorrow's got potential to be a real nasty day. You don't need to do this on your own. Come out and see us anytime in the trade room. We'll be here 8 o'clock tomorrow morning, and I look forward to welcoming you into the trade room and doing all this in real time with you guys tomorrow. Don't forget, guys, before I let you guys go, grab your free pass, register for the newsletter, grab your charts, and if you happen to mosey on over here to SchoolOfTrade.com, don't forget, here at SchoolOfTrade.com, I get a great free trial, one of the best free trials in the business. We got 3 different levels of membership, and we've got someone standing by here 24/7, 365 to give you guys any support or answer any questions you may have. Want to thank you so much for being a part of our newsletter this week. We had literally one of the best weeks in the past few months this week. Very, very good week. Hope you guys did well as well. We've really worked hard this week. Now tomorrow, we got to stay patient ahead of tomorrow's non-farm payroll report. I will not have my newsletter out on Friday, so you guys have a great weekend. The next newsletter from me will be Monday evening, the 8th of December, and we go into the second week of December, one of the last full weeks of this month. So be ready for the action next Monday. Remember, next Monday is Reaction Monday, and I'll see you guys then if I don't see you tomorrow in our trade room. My name is Joseph. From a finally sunny day here in Los Angeles, I thought possibly I was going to see the Ark float by yesterday. It was raining for 3 straight days in LA, and that just never happened. So we need the rain, but it is good to see the sunshine out here in LA. Hope you guys had a great week. Hope you're staying warm out there, staying dry, and staying on the right side of the market for tomorrow's non-farm payrolls. Do not be a stranger here, boys and girls. We're here to help. You don't need to do this on your own. Make sure you learn it so you can earn it, and we'll see you guys tomorrow in the trade room bright and early. Adios, amigos. Bye for now.